Okay, folks, welcome to the week ahead commentary for Saturday, the 19th of February. Okay, let's do as we normally do. Let's talk about attitude, strategy, about this market. How are we poised to go into the new trading week? And we'll go over the weekly charts, and I'll give you my thoughts on what sectors are going to really weaken up here. I'm not finding much bullishness anywhere. I did pull up a chart earlier this morning. The Dow Jones Manufacturing Index looks really, really good, surprisingly. Of course, the silver and gold mining stocks look really, really good. But net, we are going into a week with a very, very cautious and a bearish eye towards the market. A lot of options were called away from us yesterday, a lot of positions, I should say. We were short of the SOXL. We sold a covered put, and that was called away. We booked profits there. NVIDIA, that strangle was closed out for over 100% profit because we rolled down that call side strike. And we're looking to re-enter these trades. I'm going over my list of stocks to decide what I want to talk about. ARK doing well. We're going to take a look at the other ARK fund. ARK broke last week. I'll go over that chart in a moment. So net with the positions that expired worthless and the options that, or I should say the positions that were called away from us, we go into a week with a ton of cash, and that was the goal. We didn't want to go in with big positions over the weekend, a 3-day weekend. And I just reminded myself, I'm not going to do Sunday Night Futures Live. I'm going to do Monday Night Futures Live because of the holiday. So let's get to it. All right, as always, for the benefit of the new members, we always begin with bonds. Why? Because the bond market will dictate where the stock market goes. Boring? Yes. Important? Yes. Let's get to it. All right, let's start with yields as we normally would. Weekly chart. Another week where we were rejected. So this is technically bullish for growth stocks. We're not breaking out. We're treading water here. But this is pretty much where the bullishness for tech stocks and growth stocks comes to an end. The reason why growth stocks are coming in so much is fear of higher interest rates. Yet interest rates closed lower on the week, and growth stocks did poorly on Friday, and the yield was weak on Friday. Let's go to the daily chart. Here, 2 back-to-back down days. The market was weak as well. So let's take a look at the tip market, Treasury inflation protected securities. Traders are waking up. They're realizing the Federal Reserve is not going to do enough. Money's starting to rotate back into the tip market. This is going to do well. Look at the volume here. Great volume. This is going to do well for our gold stocks because they trade in tandem usually along with the tips. The U.S. dollar. The dollar closed out the week pretty bullish last week. We broke out the week prior, retested last week, and we closed above support. I hate the Stokes. Very, very bearish setup on the Stokes. Not a wonderful setup on RSI, but we held the breakout. Price trumps indicators. That was volume. They don't give us volume here. UUP. Here's the UUP. UUP actually closed up on the week. This is the dollar bull ETF versus the Dixie, which I just had up. Closed up on fairly decent volume. Let's go back to, I don't know why spot price is different than the UUP, but it happens sometimes. All right, the VIX. Oh, let's go back to this. Remember this chart. Right? This is important. Remember the UUP because we are long of the gold mining stocks. If we can see a continuation move up higher, that's going to probably act as a headwind for those stocks. The VIX. I think we're going up higher here in the VIX, and that therefore is bearish for equities, folks. That's why we want to maintain the same strategy that has made us profitable this year. Lots and lots of capital on the sidelines. By maintaining a standoff trading strategy, meaning we're not getting overly invested in equities hoping that they'll go up, we're going to continue to sell premium and generate cash flow. It's working. Why change now? So the weekly chart of the VIX, very bullish. Daily chart, a down day on Friday, but certainly not out. Stokes are moving up higher. RSI as well. Higher lows, higher highs. The Dow transports broke down last week. I should say this. They didn't break down last week. They were again rejected. You're going to see this pattern all over the place. Topping tails and then a continuation move lower. So the transports, very weak. Volume dropped off a little bit. Stokes are down below 20, but they could stay there. Daily chart. Yeah, they tried to rally the transports on Friday. They were rejected. Volume rose, but still below average. Stokes are horrible. Look at these Stokes. So weak. The Dow Jones Industrial Average, continuation move lower. RSI Stokes weak. We were down on heavy volume. The S&P 500 weekly chart, continuation move lower. Stokes weak, RSI weak. Volume above average. Let's go to the daily chart. All right, so we've been talking about this triangle set up on the Qs, on the Dow Jones, and on the S&P 500. And I've been saying, you know what, you can't short until we break. Well, we broke on Friday. So I should say we can't go adding more to shorts. We got the green light on Friday. Now, what they may do early next week is try to rally the S&P 500 up to recapture this prior support level. That's going to be our opportunity to lean into the short side because I don't think they're going to be able to do it, meaning recapture support. The small caps, bearish key reversal bar. We remain in a bear flag setup. We are testing the lower band. I think we break. Daily chart. Indicators are rolling over here. Bearish price action. So while I'm not ready to go short in the small caps, I certainly wouldn't buy them. The trip Qs. Bearish key reversal bar. We broke down last week. This is a green light to go short. Daily chart. Here's a triangle formation that was forming. It broke on Friday. The Qs are now officially a short. The banks, bearish key reversal. We stopped out of the banks last week. I do not like what happened up in Canada. Also remember that yields are being rejected. They're not breaking out. The banks like rising yields. Yields were down last week. The banks were down. This is why it pays to know the correlations of what sectors trade well with rising or declining interest rates. In this case here, the banks did not have an edge over the S&P 500. So we are out of the banks. RSI, lower highs, lower lows. In fact, the Morgan Stanley appeared on one of my oversold lists of scans. Daily chart. Not a horrible day on Friday. We were down on light volume. Let's bring up Morgan Stanley, take a quick look. Yeah, they really hammered this stock on volume. Let's take a look at it from a weekly view. Trying to see if there's any opportunity here. No opportunity here. This looks like it's going to break. Oof. We closed down below 92.50. It's all over for Morgan Stanley. Wow. Let's bring up Goldman Sachs. They've already broken down. They are already in a downtrend. It's confirmation downtrend. The banks are in trouble. JPM. I think this is a counter-trend move on JPM. JPM just got added to our list of potential shorts. This is a classic bear flag setup. If we break to new weekly lows and we appear poised to close there, JP Morgan, a short. Technology, bearish key reversal bar. Down on volume. Indicators are train wreck. Serious trouble here. We were in a triangle formation. We broke out. It failed. It looks like we're going to break. These Stokes are so weak. You start seeing lower highs and lower lows on your Stokes, that's a recipe for disaster. Semiconductors, they broke down last week. They actually closed flat on the week, but they broke down. It was a breakdown in time. Basically, they consolidated sideways enough to close down below a support level. Lots of volume here. So there was a real big tug of war last week. Let's go to a daily chart. In the semi space, big tug of war. It doesn't look like they're going to hold. So we're going to look to reopen that SOXL trade. That's the leveraged ETF putting you long of the semis. And basically what we did was we shorted it. Energy, I think we're going to pull in here. I think if this market makes new weekly lows, then we're going to see energy, even the gold stocks. The margin calls are going to go out. People are going to sell what they need to sell. There's going to be panic, and we're going to take advantage of it because we have the capital. The key is to identify historical support levels, wait till those support levels get hit, and then go big on the trade if you're at extreme oversold levels like PayPal, which we'll go to in a moment, which is just in unsustainable downtrends, and we take advantage of it. So energy, down week. I think it's the first of a few. Daily chart, yeah, real sloppy price action here. Your Stokes are rolling over, lower highs, lower lows. Down volume wasn't bad on Friday. Natural gas, vacillating here, nothing really to do. Oil, even oil showing signs of topping action. This is a doji star formation, a sign of indecision. When you get it at the top of a trading range, it generally means a trend reversal, at least in the short term. Now, the Ukrainian, air quotes, crisis is still in the headlines. You've got a lot of people on Fox News. I don't watch CNN or MSNBC. I'm not a big fan of Fox since the elections either, but a lot of high-profile retired generals who are talking heads now, putting it out there that they firmly believe that there's going to be an invasion by the Russians. General Keane, and I forget who the other guy was, but you don't know if they profit. Honestly, you don't know if they profit from an invasion. They'll certainly be on TV more, so they'll profit from that respect. So we need to simply be patient and watch and see what happens. I don't want to say it's definitely not going to happen because I don't know, but I certainly don't believe these talking heads either, and I certainly don't believe this corrupt administration. The emerging market space firming up here. I don't like the price action, but we're being sent signals by the Stokes and RSI. We're putting in higher lows on Stokes. Let's move this up because we already put in a new higher high. Let's move this up. Let's see if we break out. Now, with the dollar holding a breakout point, it's going to be difficult for the emerging market space to rally, but I am going to be going over later on Indonesia. I've spoken about it before. IDX, the symbol. It's looking really good. Gold. We had an outstanding week last week on our gold stocks. Gold, massive breakout. I mentioned if we see a close above 1850, it's going to rip, and that's exactly what happened. We're up over 3% on the week alone. Stokes looking the bomb, looking really, really good. Higher lows, double bottom setup. They're breaking out. RSI, same deal here. You take a look at a monthly chart. Beautiful continuation move up higher. We do have resistance above at 1900. We're right there. Daily chart. A down day on Friday. We may pause, consolidate. Next resistance level besides 1900 is around 1912. Oh, yeah, 1912. Yeah, that works. All right, two positions. GDXJ, we broke out. We hit resistance. This is the primary upper band of resistance. We've been here before, and we were rejected. It happened again last week. No big deal. We want to see a consolidation, maybe a retest of support next week. Guess what? We're going to be buying. We're going to buy more. Now, as for NUGT, an awesome week last week. It broke out above the upper band of resistance. What's the difference between the two? NUGT is a leveraged ETF tracking the GDX. The GDX are your large cap gold mining stocks, whereas the GDXJ are your junior miners. Big difference. So very similar chart as to gold, higher lows, W formation, RSI. I mean, this is a perfect chart. Now, we may get a pullback. That's why I didn't want to hope that we would break out immediately above 60. We had a heck of a run last week. We closed up 12.66%. We closed out the week at 57.94. We booked partial profits on NUGT at 59.34. I think we can get a continuation pullback. So what we may do here is sell puts, maybe at the 56 or 55 strike. We're kind of extended here. The 200 period moving average is at 54.70. So that $55 price point to sell puts at looks pretty attractive. If it's assigned to us, we'll pay $55 minus the premium paid, and we're back to the same size position that we had in NUGT that we did this time last week, but at a major discount. So that's how we want to trade it, standoff trading. Gold money, weekly chart. A really nice week last week, up nearly 10%. Stokes are hooking up. We're probably going to add more here. I just don't like the fact that they're in Canada. What's going on up there is very disturbing. Daily chart. Look at this rip on Thursday. We pulled back. I think we're going to pull back further. We may buy at that 1.60 mark. That looks very attractive. The silver stocks. We had a great week here too last week. Up 2.42%. Stokes hooking up. Great volume. Exactly what you want to see. Daily chart. They took a pause on Friday. That's okay. Silver, should say, not silver stock, silver. We remain in a consolidation range. I'm going to be looking to buy more here on a breakout. You see AGQ break out above this upper band of resistance on a weekly time frame next week, which I think it's going to. We're going to be adding more. Daily chart. A little bit of topping action here. I don't see any rush to go running in on Monday morning to buy more. We'll buy it on a pullback. Just be careful. Lower highs here on Ultimate Oscillator. I don't like that. PayPal, not PayPal. Cal-Maine Foods. We're going to go to PayPal next. Cal-Maine Foods closed out the week down, but well off the lows. The macro play here, folks, this is our little egg company. Right? It's part of our inflation portfolio. Monthly chart. Look at this monthly breakout. We're nearing the end of the month. This breaks out like this. If this closes like this or better, it's a major breakout for Cal-Maine Foods. So much so that if we pull back in March and do a retest of the breakout point in blue, I may open up a long-term, I don't know how far out they sell options on, but long-term call option trade and leverage off this position, because this is a unique situation. If somebody were to ask me, what's your edge for buying call options? And that's what I always ask people. If you can't say in one sentence why you're purchasing options rather than selling them, you don't have an edge. Therefore, you shouldn't be buying call options or buying puts. My edge here is simple. Monthly, quarterly charts are breaking out of a multi-year base. The longer the consolidation, and this is one heck of a consolidation, the greater the validation of any breakout. Taking a look at a quarterly chart. Look at this. This is a massive breakout, and nobody's paying attention. Well, some people are, because volume's picking up. I should say that. Let's go to a daily chart. Nice orderly consolidation here. The markets were down on Friday. We closed up on volume. Perfect. Absolutely perfect. Moving on to PayPal. Now, PayPal, we scratched the itch. We bought a position in PayPal, but not overly aggressive. We are waiting for support levels to get tested, and a few of them got tested last week. 110 got tested, we broke that support level. 107 got tested, broke that support level. 105 got tested, broke that support level. Where are we trading right now? 103 spot 65. Where's support? Between 100 and 102. So we start trading between 100 and 102, and we start seeing bullish reversal days on volume. Even on a 4-hour chart, we see a bullish reversal bar. Guess what? We're going to be ramping up our position here, and I may start buying call options, maybe a bull spread, meaning buy a deep in the money 70 delta. What's a 70 delta? That's when a option has a 70 delta and it moves 70 cents for every dollar move of the underlying common stock. And then we simultaneously sell a 30 delta deep out of the money call. The cash flow from the call helps finance the trade. It's not 100%, but partially offsets our expenses. You only buy options when you have an edge. So let's talk about what our edge is. Well, we know that we have a ton of support here. This is an S&P 500 stock, and we have an S&P 500 stock that is making money with weekly RSI at 14.63. Stokes, our train wreck, we've seen lower highs down below the 20 mark. When you see that, you know the stock is going to get punished really, really bad. The however is that the rally is ruthless. The counter trend move is ruthless. You're going to see a short covering rally. They're going to rip the faces off of shorts. Daily chart. Now the daily chart, RSI now down at 20.99. Stokes, they're at 1.30. You don't get much lower than this. It's flatlined. The reason why we can't get overly aggressive is that despite the fact we've tested a couple of support levels, they haven't held. Why? Volume. You still have institutional selling. We don't want to fight these guys. Now, what I will point out is that I think that we are seeing some bullish signs here. As noted by, of course, our RSI's weekly daily time frame are oversold. But you take a look at your ADX, and many times you'll get this. You get a double top. I think that we roll over here. I think that by the end of next week, we will have seen a bottom, maybe a consolidation, if not a rally. A rally, most definitely the following week. The only other fly in the ointment for PayPal is that the overall market looks weak and it's probably going lower. It's going to be difficult for PayPal to find sufficient enough buyers to A, overwhelm the continued selling from institutions in a very bearish market in terms of technicals and in terms of sentiment. But I think we're setting up here for a great opportunity. And this is the value of having cash on the sidelines. When people are freaking out, getting their faces ripped off because they thought 120 was going to hold. Remember, we owned PayPal back here. It broke our support level. We were out in a blink of an eye. Thank God. Thank God we admitted that we were wrong up here, because now we're back. We're sitting with cash. We're going to get back in at much cheaper prices. That's PayPal. NVIDIA. All right, so this strangle, the earnings trade, it was a great trade. We did very, very well. Congrats to those who joined in. NVIDIA is going lower. So I'm okay with opening up a strangle. I think that we could see, I think we're going to see NVIDIA down with a $100 handle, meaning I don't think it's going to $100. I think that we're going to have support tested at 195 or 180 down here. So I want to keep my strikes on that strangle very, very wide. And why do I think it's going down? It's because it's setting up just like the ARK funds, just like the S&P 500. You're seeing topping action, right? This is the market saying there's a lot of sellers above. I'm going to keep my call side strike, and we're going to sell this strangle. We're not buying it. We're generating cash flow, folks. So just there's two strangles, right? It says short strangle and a long strangle. We are doing a short strangle, meaning we're generating cash flow. And if we break down, we'll do as we did on Friday with NVIDIA. If we get a 50% profit on the call side call option, and we have a lower price point where the probability calculators are telling us that we have only a 15% probability of trading in the money, we'll roll down that call side to protect the put side. It's worked for us in the past. We're going to continue to use that strategy. And if you're going to use this strategy, you need to be really picky with the stocks that you're choosing, because you're selling, in essence, still a naked call. So you want to trade a stock that is, in all probability, not going to get bought out. It's too big. NVIDIA is, in all probability, too big to get bought out. Number two, your put side. If the shares are put to you, it better be a company that has got really, really good fundamentals and you don't mind getting it put to you at the strike that you sold it at. So NVIDIA fits the bill for us. That's why we like trading NVIDIA. Airbnb. And these are watch stock, folks. Watch stocks. Airbnb. We did an earnings trade on this. We made money. We did well. I like the setup here. They had really good earnings, but they sold the stock off. I was looking for a retest of 179. Not only did it test it, it failed. It broke through it. So a lot of people are selling the shares, and we could head down a lot lower here. This may be a stretch of me to say, but it looks like this may be a W formation. Excuse me, not a W formation. A bear flag setup. Now, what I said earlier about a W formation is kind of a Freudian slip, which I've already spoken about before in the past on Airbnb, because I did some analysis on their longer term charts after their earnings announcement, and it's like finding a diamond in the rough. So here's the left side of your W. Here's your pivot point. 212.58 is the pivot point. Here's the right side of your W. I think that we may be breaking out. So yeah, should we fail to hold 155? Well, it's probably going to go lower, a lot lower. But if we hold 160 to 155 and we don't break down below this lower band of support, guess what? We see a bullish reversal day. Airbnb, we want to be a part of. So this is another company where we may decide to open up a strangle trade, a short strangle. And the best part about it is that earnings are in the rearview mirror. We know earnings are good. If the shares get put to us, are we going to mind owning it? No. But it's a very expensive stock. Keep that in mind. I think they still sport a multiple. Here, let's go to investors.com to answer the question accurately. Okay, so here we are at investors.com, Investors Business Daily. They have no PE ratio. So it's really, really expensive. So just keep that in mind. EPS changed last quarter, 101%, folks. Sales changed last quarter, 78%. 3-year growth rate, 7%. That's not that great. So that's Airbnb. ARK funds. We are short of the ARKK using naked calls, and we're doing very, very well. In fact, so well, we may need to roll down that strike this coming week from 85 to lower. This is such a bearish chart. I may just keep the 85s on and just open up new contracts at around 80. So more to come on that. The other fund, ARK fund, that we're looking to short is the ARQ. This is the Autonomous Technology and Robotics ETF. Very similar topping actions to what you're seeing on the Qs, NVIDIA, ARKK 2 weeks ago, right? But what happened last week, after all this topping action, we broke support. Fast forward, ARKQ, similar price action to the ARKK. I think that we are going to get resolved here, but to the downside. LABU, weekly chart. So I think it was a wise move to appreciate the fact that these candlesticks were flashing topping tails. We were selling premium, naked put premium, which is a bullish trade on LABU. We were doing well, but I got worried about the $20 per share mark now being resistance. We were selling the 20 put. So we exited that trade. We did not roll it. Now we're going to look to reopen this trade, maybe down with a 15 handle. But I want to be respectful of the weakness of the overall market, because LABU does trade with the overall market. And if this market does what I think it's about to do, LABU may break to new lower lows. So no great rush here to go selling naked puts, because again, that's a bullish trade. And look at the volume here. tons of distribution bars. And that is it for this week, folks. I will talk to you on Monday night, on Monday Night Futures Live, given the holiday, and I will talk to you then. Be well.